Very good afternoon, everyone. Welcome to today's uLaw webinar. Today's uLaw webinar is accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. And the topic or the title for today's CPD webinar is Law Office Expense Management. So that's the title or topic area that you would type in your appropriate provincial law society website to be able to redeem those hours. This particular webinar is being recorded and will be available on our YouTube channel as early as Monday next week. So we look forward to you subscribing to our YouTube channel and hopefully consuming these videos. Any previous CPD sessions are also available in the same video channel. I kindly request everyone who's joined today to, if possible, use the phone lines provided for a better quality experience. Please to mute your phone lines so there's not a disturbance. And over the next 55 minutes to an hour, we're going to be pretty much focusing on the main focus topic for today, which are what are these law office expense management? What are the types? How do you as a legal firm manage these expenses? And we're going to try and differentiate the two core types of expenses that a legal firm comes across on a day-to-day basis. The law society expectations in terms of how you manage these expenses, the types of documents that are required to be produced as part of both your regular audits or as part of your compliance bookkeeping that are meaningful for the spot audits or whenever the auditor does ask you for these documents. Okay? So like every other uLaw webinar, today's webinar has, again, a specific agenda. We're going to talk about the two major categories of expenses in a law office or a legal office, namely disbursements and the business office expense side. And when we talk about disbursements, of course, we're going to talk about the client-related expenses, which are AKA disbursements. We're going to cover that. Specifically talk about disbursements, how do you manage them, the opportunity that a legal firm has as to how you pay for these disbursements. You may either pay it using your trust account, or you may actually pay for these client-related expenses or disbursements otherwise using your general account. And we'll talk about some of the best practices when it comes to the type of account to be used for the type of expense that you incur. Once you've kind of covered what disbursements are and how you manage them, the appropriate documentation that goes along with it, then we'll talk about the office expenses or the business expenses. Okay, and how do you manage those? What is the difference between these two expenses? The specific documents that are associated with office expenses, right? Of course, office expenses are not recoverable, and that's one of the most fundamental differences between, let's say, disbursements and office expenses. Disbursements are specific to a client matter, whereas office expenses are specific to keeping the lights on, running your office expenses specific to the law office's requirements. Right? And we'll also talk about the types of these office expenses. And finally, we'll talk about the analytics and how you as today's modern legal professional can use the tools and technologies, including legal accounting and mobile apps, to be always on top of this information, to consume data faster so that you can make smart, meaningful decisions with the information around these expenses. Okay? And at any given time during this webinar, kindly do use the chat window that's been provided to you to ask any questions that you may have specific to today's webinar. We do have our support staff online who would be able to answer those questions. So let's get started with the first type of a law office expense. And we'll start with the disbursement. So by definition, if you really look at the screen here, I'll focus maybe on the layman's term, right? The layman's term in defining disbursement is really expenses incurred by your legal office for a specific client. And I'll go one step further to say it's not just for a specific client, it is in fact for a specific client matter. Okay? And I say that because for the same client, your legal office may actually be running multiple files. But it's very important to capture the disbursement or that expense that has occurred for not just that client, but very specific to the client-specific matter. From an accounting perspective, what this really means is that you are responsible as a legal firm to record this information in your books, which is the bookkeeping, so that it's easier at the end of the day, end of the week, end of the month for you to balance these accounts that you've spent, the invoices that you've generated, so that you can be ready to recover these expenses when the time is right. When I talk about the time being right, it's truly the invoice cycle that you have agreed upon with your client based on that engagement letter. Of course, the scenario would be different if you did have trust money involved. If you had a retainer involved, for example, you may then enter that disbursement, generate that invoice, and instead of waiting for a client payment, you of course now have the opportunity to transfer the eligible earned amount from your trust account into your general account, okay? Especially if you've paid out of general. But in terms of a law society's audit perspective, what it really means is they expect the legal office to manage and maintain the proper bookkeeping of this information and to be able to depict that the history and the audit trail of these transactions in a chronological, sequenced, formatted document as expected by the law societies of the individual provinces. In contrast, the other category, if you will, of expenses that a legal office incurs on a day-to-day basis, and in fact, especially if you're starting off as a new practitioner, this may actually start out to be the most amount of data entry that you do with regards to getting started with an office. Even before you actually sign up with clients, the business and office expenses would certainly be something that you would have to deal with, whether that's your law society fees, your insurance fees, the rent for your firm's space, all of the stationery that you need to purchase, etc. All of that are the types of expenses that we're talking when we talk about business or office expenses. From a layman's perspective, really what it means is these are expenses incurred for keeping the lights on in your legal office. I'll go one step further to say that these are expenses that are not recoverable. So you really can't ask a client to pay for your rent, right? Straightforward, but just setting aside the facts as they are. Whereas a disbursement, because the expenses you as a legal firm are paying on behalf of that client, of course, it's your due diligence to ensure that you get paid back and recover that expense that you've already paid for from that client. Whereas in the case of business expenses, these are just the regular expenses to keep your office alive. But from an accounting perspective, the law society still requires you to manage, maintain these books. One is to, of course, have the rules and regulations of the law society, but we go one step further. We always talk about how important it is to keep your general business bookkeeping intact so that you as the business owner and the operator of this business always have the most important piece of information, which is regarding the revenue and the expense, which pretty much mathematically gives you whether it's a profitable term or whether it's a term that's going through a loss. So bottom line, there are two different types of categories of a law office. You've got disbursements that are recoverable from clients based on expenses for a specific client's matter. You then have on the other side business or office expenses that that are meant to keep the lights on the business itself. Okay? And there you go. Disbursements are recoverable. And of course, very important that you have a method, whether that's paper-based or whether that's using a system, a legal accounting system, or any other system that's meaningful to your firm, to capture the moment of these transactions as and when they happen, and find a process or a methodology to be able to report it in the specific format in which it's being required. Okay? Why track them, right? We've tried to explain this in simple terms. Of course, if you don't track disbursements and if you don't have a method or due diligence of capturing them as and when they happen, and if you miss out on these disbursements, then of course you miss out on the opportunity to recover that expense from the client, which invariably results in the expense quotient of your business, which results in the profitability. And why do you track the office expenses? Of course, is for the same reason of understanding what the expenses are, what categories are there being utilized under, how do you calculate and be smart about reducing these office expenses, and finally, depending on your situation of your firm, if you are into or if you've already signed up for a HST account or a provincial tax account, HST being the one in Ontario, GST, PST being in the other provinces, then it's important for you to manage those provincial taxes that you've both received and paid for, so that when you file these taxes, you're pretty sure about the math, about how much you owe the government or how much you should expect as a return, tax return from the government. Okay? Okay. So let's note that we have an appreciation, hopefully, about the two types of categories. Let's start off to do a deeper dive into the disbursements. So one of the important questions that are always asked are, what are the key steps in the law firm being able to capture the moment? And what are the steps that you have to take so that you not only capture it, but you generate the next steps in terms of recovering it? So in terms of key steps when it comes to disbursements, one of the first considerations that you as a legal firm would have to do is have a plan as to how you go about paying for these expenses. They may change, of course, based on the situation of the client, the nature of the matter itself, but it's of course important that you lay that particular plan out in the retainer letter or the engagement letter, be very clear in communicating what that plan is, and of course getting your client to sign on it so that that's a mutual agreement and clarity of thought as to how the disbursements are going to be dealt with by your legal office. Let us assume that there is no trust involved. Just try and keep it a little bit more simpler. Let's assume it's an engagement letter where you're basically going to incur that expense upfront. You're going to pay for it using your business credit card as a legal firm, and then you're going to generate an invoice that then has a line item of this one particular expense or multiple such expenses, which then you have an agreement, of course, in that engagement letter, and the responsibility of your client to pay you within a stipulated time period, otherwise known as days on sale or net terms. For example, you may sign up an engagement letter which says, every invoice that I send you, client, Mr. Client or Ms. Client, we as a legal firm expect you to pay within 15 days, 30 days, etc. So you first incur that disbursement expense. You record that disbursement expense. And when you talk about capturing the moment, it's important to capture the elements or the data elements of that transaction. Okay? We'll talk a little bit more later, but just to give you high level information such as the date. So when did this disbursement occur? So we can keep this real. We can keep it within the terms because there are many different transactional details and documents that are all based on the term that when it occurred. So of course, the date of that disbursement, the amount of that disbursement, the client and the specific matter for which you've incurred this disbursement. Did that amount that you paid for include any taxes? Or if there were no taxes, it's important to capture that as well. And last but not the least, how did your legal firm or which account, bank account, did your legal firm utilize to pay for it? Was this your general account? Was this a office business credit card? Was this someone else in your firm who paid for it on behalf of your firm? Did you pay this out of your own pocket? In which means the business then owes you, the individual, that money. There are many different combinations there, but it's important, of course, to capture that information. So here are the top 5, 6 elements or attributes that combine to define that particular transaction. Now, once you've captured the moment, as I mentioned, the next logical step, of course, is based on, again, the agreed upon schedule, generate an invoice. Now, certain clients for certain types of matter may decide upon a very regular expected cycle, which means, let's say a corporate law matter, the law firm may say, we're going to generate a monthly invoice, which pretty much includes all of the expenses, the disbursements in that particular month. There could be other types of matter where you're basically invoicing as and when a disbursement occurs. So based on the cycle that you've agreed upon, after you've captured the disbursement, the next step is to really generate that invoice. Now, in generating that invoice, of course, there are little subtle nuances or best practices that you may look to practice or include as part of your process. And this is based on our last 9 to 10 years of being in existence as a legal accounting company and working with our clients and hearing their stories. It's a very important step for you to have to understand if there's a opportunity for you to pre-bill prior to sending the invoice to the client. What is the pre-bill? A pre-bill is just a preview or a document which is really not an invoice or one step prior to being an invoice, which gives you an outline of the key transaction trail that's part of that invoice. So you've got a couple of dockets, maybe a few disbursements. It gives you, the legal firm, an opportunity to review it prior to committing and generating an invoice. Some law firms even generate pre-bills, send it to their client, get their approval before they send out an actual invoice. Why do that? Because if you do generate an invoice, send it to the client, and let's say for sake of argument there is a conflict, or if the client basically asks, why did you actually charge me the disbursement, or if there's some kind of a negotiation which says, I'm sorry, I'm not going to be able to pay you for that disbursement, then it's just extra bookkeeping for your legal firm to then change that invoice, the information in that invoice, and resend a new invoice. Now, today's webinar, for those who joined us a bit late, it's actually mentioned in our chat window. It's called Law Office Expense Management, and that's the name of today's webinar. It has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. Okay? So of course, pre-bill is a great tool that you can use to make sure that you're comfortable with the information in the possible invoice, your client's completely comfortable with that invoice that's to come. Now, if you paid completely out of your general account, then you generate the invoice and then wait for that payment from the client. Once you accept that payment, you're pretty much done. Right? Now, the other step could be that you paid for this using as part of a retainer. So let's say you got a retainer agreement. You've got a $1,000 retainer, and now there's a $200 disbursement. You generate that invoice. Typically, you don't wait for that payment you now have freed up $200 of eligible money that can be transferred from your trust account, which is the money that you already got within the retainer. Move that $200 of disbursement that you've already incurred and move that into your general account, which is called the trust transfer from the trust to general. So in the first case where there's only general, you wait for the payment. In the second case where there's a retainer involved, you have the opportunity to move the money from trust to general for the eligible amount for which you've generated in that invoice. Now the third example, which is really what we're trying to say at the top here, so first was the general, second was the retainer, moving it from trust to general, where you still have paid out of your general account. But the third example is you being able to pay for a disbursement right off your trust account. So you're not paying it out of your general account, you're not paying it out of your business credit card for it. You're actually paying a trust check, let's say an application fee or a court fee, directly off your trust account, your pool trust account. Okay? So a good example is, let's say you got that $1,000 retainer and you have a $200 disbursement. Instead of generating the invoice and then either doing a trust transfer or recovering, you basically pay that $200 right away from that trust account. So it's a trust check that's sent to the Ministry of Finance, and that $200 is directly deducted, leaving your trust balance, of course, for that client's matter at $800. So everything else is now out of that $800 accountability. Okay? So example as court fee, application fee, and our point is, it's really not your money after all when you're paying expenses because it's recoverable. So it's one bookkeeping step less compared to the other stuff. But predominantly law firms we find across Canada, of course, use the general account to pay for it, and that's perfectly fine. Just letting you know that you do have the opportunity to pay directly off your trust account if there's trust money or retainer money involved. The one thing to keep in mind is around the owner's pocket, and this is an example that I mentioned. So if you've not, from a general accounting perspective, if you've not used a company's general account, if you've not used your company's business credit card, if you have used your personal credit card, personal debit card, personal cash, whatever it may be, then it's very important that you capture that, tag it as your owner's pocket or the money that's come out of as your personal money, so that it's easier then to reconcile and have a better appreciation for how much the business, the legal firm, owes you, the individual, for all those expenses that you as the individual incurred. Okay? One of the top questions that we get asked on a daily basis, what's the right time to generate these invoices? And a quick and simple answer is purely based, and the answer to this is based on the engagement or retainer letter agreement that you sign with your customers. I did bring this up earlier on, but it really comes down to that. So you would check your retainer or engagement letter to figure out whether you have to do this on a stipulated cycle or monthly, bi-weekly, weekly basis, or do you do it as and when it happens? In both these cases, what's most important is that you still have a process and a mechanism to capture, enter the data as and when it happens, and have either a reminder or a way of knowing the time period with which you should generate that invoice. What are some of the types of disbursements that we believe legal offices come across on a day-to-day basis? And from a best practices standpoint, just a little recommendation in terms of the types of disbursements that are better candidates to be paid out of trust compared to disbursements that are better candidates to be paid off the general account. For example, a thumb rule, if this is a billable disbursement, right, what you incurred as what you're recovering, such as an application fee. If it's $100 that you paid the Attorney General, then that's the $100 that you can recover. So basically actuals. Then you can use both trust and general. Unit rate. So if let's say you're doing a fax or photocopies, then better candidates to be paid out of general. Likewise for travel time and mileage. So in essence, if it's an actual that you're recovering, then you could use both trust and general. But if you're going to recover these disbursements with either a profit or a loss margin, then definitely stick to general. Okay? Perfect. So now you have, let's say, gone through the step-by-step process. You've gone through the process of entering these disbursements in time with all of those data elements that we spoke about. You've generated the invoice based on your situation, of course, and you've either transferred the money or you're waiting for the client payment, or if the client's paid you right away, you've deposited that money into your general account. All of that's done. Fantastic. You close the matter and you move on to the next client. Behind the scenes, all of these transactions that you've captured, now the Law Society would like to audit you, of course, on a frequency basis to ensure how you've managed the different dollars amounts, the monies that involved. And there are different documents that tell a story, and through these different documents, the Law Society would like you to tell them the story of how you managed money coming in and leaving your office. Documents such as your fee book, documents such as journals, ledgers, disbursements journal, both for trust and general. Okay? And we're going to take maybe 5 to 10 minutes at the end of today's webinar to kind of give you a quick walkthrough of the types of documents that you can generate using uLaw just as an example, as a system that can generate for you. If you're doing this on a manual basis, of course, the bookkeeping guidelines across these provinces, the Law Society's bookkeeping guidelines, clearly indicate the templates that you could use to depict these audit trail ledgers and journals in a specific format. Of course, these documents, each document has a little nuance to it. There are certain documents that have certain data elements to it. There's, and they differ. For example, if you talk about the fee book, it captures the date, the invoice number, right? Not just the client and matter, but the invoice number involved, the amount, and the specific provincial taxes that was billed upon. If you look at a journal, it also captures the method of payment, right? So what's the check number? Was it a business credit card transaction? And there's a quick question around what does it mean for disbursements as actuals. Now, a good example is sometimes if you're outsourcing a specific work. So let's say there's a disbursement involved, and let's say you actually have another legal professional represent you in court. So it's for example, like a consultancy that you've outsourced for a matter that you're working on. Sometimes you may charge a little bit more, or sometimes you may charge lesser than what actually you incurred as an expense that it's happened. People who buy software, like different types of software, you may have negotiated a better deal with the software vendor for, like, say, 5 or 10 licenses, but you may charge your client, let's say you've charged your client $100, but you've got actually a $50 or 50% discount with your software vendor. That's the little profit margin you're making. That's really not actuals. Actuals is I paid $100 to the court, and that's exactly the $100 that I'm charging the client. Rather than I paid $50 for this disbursement, but I'm actually charging $100 to the client, or the other way around could be possible, where you had agreed on a flat fee with the client, but it so happened you could not go to the court, but now you have to pay a third party, and they're charging you $200 that was never agreed upon with the client, and it may actually be a loss. right? So you may incur that expense because you unfortunately couldn't do it, but you still have to complete the matter. So in those cases with profit or loss, it's really not actual. There's a margin associated. In those cases, we suggest you use the general account. And the reason for that is, again, is making sure that the story within the trust account is clear. There are no ripples in the story that the trust journals and ledgers tell you. Okay. So we've kind of taken a deeper dive, if you will, on one side of the house of the expenses around disbursements, how you capture it, details of the capturing, the cycle of having to necessarily generate an invoice, because that's the official method of how you can depict the expenses incurred so that you can recover that money from your client. Because your client's going to say, what's the proof that you actually paid for these expenses? Well, here's the proof. It's an invoice, and here it is, right? Now, the other side of the expense keeping or bookkeeping is with regards to your office expenses. And we spoke about this earlier. When you're getting started, of course, you would notice that you tend to have more office expenses than disbursements or even revenue. So let's say even before you got started with clients calling you and you're retaining you had office expenses. I'm sure you're going to have office expenses on a daily, weekly, monthly basis based on the different types of expenses that you have to incur for your to run your business, legal or law office business. We spoke about examples such as the law society fees, the rent. It could be the internet charges, the phone charges that you have, the insurance fees that you have, the paper that you purchase for your printer, for your firm. You may purchase laptops, other stationaries for your business. All of that would be good examples of that. But it's important that you do keep a tab on these expenses as well. Of course, you can recover it, but it's important that you keep a tab on these. And there's two purposes. One, of course, from a provincial tax perspective, it allows you to almost match the HST or the provincial taxes that you received with the provincial taxes that you've paid to reduce the burden of whether you pay the government or expect money back. Right? So if you've received only $500 and you've paid up to $1,000 of taxes, and of course you wait to receive, you have to depict that, and as part of your provincial tax filing, you would show the amount that you received through the invoices, the amount of money that you paid through the expenses, and this minus that gives you whether you owe the government or the government owes you the money back, right? So for that very important purpose, it's there. Let's say you don't have taxes, the provincial HST, GST, PST situation, it still is important for you to understand where are your expenses as a business going. This is just, management of business 101. There's two major components. There are other components, but the two major components for any business is revenue and expense, because that determines the profit and loss of the business. And hence, it's very important for you to capture the expense side of it, because there's two things. One is to reduce the expense, which is reducing the cost of ownership, which improves profitability. And if you don't have a tab on it, it's going to be harder for you to make smart decisions of where and how and when you can reduce these expenses. So let's say you have this rent, and you don't have let's say you're just moving as you go along, and you're not keeping a tab on that increase of rent, you're just paying it out, and you're starting to see that for whatever reason, the profits are always getting hit hard, then instead of having to react at the end of the year, having to react at the end of a term, it's best if you can be proactive in always keeping an eye on these expenses as and when they occur. So, for example, running a weekly, or weekly is too tight, at least on a monthly basis, understanding where were those expenses. 30% of your monthly expenses, let's say, went into rent. 5% went into utilities, maybe. 10% went into stationery. So having a general spread, and then being also able to compare it. For example, let's say compared to June, what was my July expense? Compared to September, what was my October expense? Compared to last year's October, what's my expense this year? So have I been smart to reduce it? Maybe you find that this rent is really expensive. Now it's time for you to use that information to make a decision. And that decision could be maybe renting at a cheaper space, finding a coexistent space where you're sharing the rent between other like-minded legal professionals. So there could be many different steps you might take, but the first step before you make a decision is to know the information. And capturing office expenses, just like disbursement, gives you the opportunity to assess and process that data. Process data is information. And we spoke about this, so again, straightforward. Furniture, stationery, law society fees, telephone cable bills, etc. Other examples, rent, property maintenance, of course, corporate taxes. That's part of your expense too. So you pay a certain percentage on the profit that you make as a business when you do make that. Well, if you're not profitable yet, then you don't pay that. But when you are profitable, you pay a certain percentage depending on the province. For corporate taxes, of course. There could be, depending on the firm size, you could be paying salaries, dividends, and even expenses to any borrowings and paying back borrowings for running the business, right? Typical examples. Again, the question comes, this is yet another record keeping or bookkeeping. How do you record them? Yes, you don't recover these expenses, but it's still an item to be recorded in time. Just in time or just as and when it happens is a great time period to do it. But there are tools out there, software tools, legal accounting tools, including uLawPractice and some others in the marketplace that do allow you to import, office expenses on a time period basis, where instead of you having to enter them as and when they happen, let's say you had 100 transactions a day, 100 expenses a day. Most unlikely, but let's say that is the case in a large law firm, then instead of having to enter it as and when they happen, they can just import that entire line items, 100 expense line items, from the bank statement into the bookkeeping software or an Excel sheet, whatever it may be. So there are tools that can facilitate a bulk import or data entry, or if you're only going to have 1 or 2 expenses a day, then it just makes it simpler and easier for you to enter them one at a time. Now the data elements, we spoke about data elements for disbursements, which included the date, the specific client and the matter, etc., right? So there are data elements, of course, for the office expenses that you need to capture. Just imagine having a receipt of a Starbucks or a Tim Hortons or any expense that you have incurred, or a phone bill, right? There's, of course, the date of that expense when you paid for it, the name or title or a little description, if you will, of what was that expense for. At the end of the day, as business owners, what happens is your memory is short. There's so much you have to do. But when you capture the information, if you can explain as much as possible in detail what that expense was for, it just makes it easier for recollecting that memory 3 months down the line as to why and what was that expense for. Or in fact, you have to do it on a monthly basis anyways for your reconciliation, right? So a little title such as, phone bill, or October 2019 LSO fees, right? Little descriptions of that expense. What is that? Then comes the type of expense. So this is really something that you can categorize. So you You can be smart about categorizing, starting with the initial list and then adding categories as your firm matures and you mature as a business owner. So expenses such as advertisement, it could be rent, corporate tax, the standard usual suspects that, if you will, as every business would have, right? And why would you do that is going back to making those smart decisions, really understanding where is the spread of where I'm spending my expenses on a monthly or a time period basis for my business. From a provincial taxes perspective, another data element important is the total amount, including taxes, pre-tax, tax, total amount. Because the tax really calculates the amount of tax you have paid the province. So you purchased paper at Walmart for $100, you paid Walmart $113, $13 being the HST, and let's say example in Ontario, that's the tax you've paid the government. Okay? Method of payment, just like in disbursements. What bank account did you use to pay for that particular expense? Very important, because especially when it comes to office expenses, and we find early on in the game, or if you're a sole practitioner, you're using a bunch of different business accounts to pay for these expenses. One day you could be using cash, which is your own money, or cash that you withdrawn from the business. You should be really aware of what that cash is. Or one day you could be using your business credit card, maybe writing a check from your business. Another day you could be using your personal credit card, right? So life throws many different such situations. So it's important that you remember and capture which bank account did you use to pay for that particular expense, so that it's easier to reconcile that particular account. And the last two questions, of course, very straightforward. Who was this paid to? If it's a rent, was it paid to the rent property? If this is a phone bill, Bell, Fido, Telus, Rogers, AT&T, whoever that may be, right? That's the most important question. As I mentioned, today's tools allows you to capture these office expenses in many ways. One, if you have slower record-keeping requirements on a monthly basis or a daily basis, 1 or 2 a day, straightforward to just do them manually. If you have 40 or 50 a day, you can maybe go the next day, import your bank statement on a daily basis if you like, or on a weekly basis, so that you're basically capturing all that happened in the bank. But of course, if it's a cash transaction, you still have to remember it and enter it manually. What's important with the bank is that besides your bookkeeping system, there's also another system that has technically recorded that transaction, and you're just trying to piggyback and fall back, really using the bank statement as a fallback and importing that. But if you're dealing with cash transactions and you're paying for, let's say, the same Walmart situation, you paid $130 using cash, the bank would really not know it, because you withdrew maybe $500, you use $113 for paper, the remaining money, right? So in those situations, of course, a manual intervention to ensure specifically what that expense and how you paid for it through cash is very important. And you can do them in batches as well. You've captured them, you've got all the data elements right, and now what? So there are a bunch of documents, of course, that also require you to tell a story. Just like how every disbursement and the journals and ledgers of disbursements tell a story, the journals and ledgers of your general business bookkeeping also tell a story. Documents such as the expense book, like how we had the fee book, we have the expense book, where are all my expenses, all my provincial payable statements, my profit and loss statement, fantastic document that every business, of course, produces on a term period. Because part of the profit and loss, of course, is how much was my revenue and how much was my expense. The expense, of course, just being an added arithmetic of all the expenses that you incurred in that time period. So now, having kind of discussed the two major categories, the responsibility of what details to be captured, how you capture them, how you record them, and the possible documents that need to be, provided on a regular basis, or generated rather on a regular basis, we kind of just move on now for certain aspects of business keeping that makes it easier for you as a legal professional in today's day and age to use technology to your advantage. With the advent of cloud, of course, a lot of this information is available at your fingertips across multiple devices. We're in a day and age where we're starting to see the amount of mobile uptake of using mobile devices. We've slightly moved away from the desktop era to now moving away from your laptop era. We're going to be looking in the next 5 to 10 years where most of us are going to start to use our mobile phones predominantly to do a lot of the work. So we'd eventually move away maybe from the tab era, don't know, but that's the inclination right now. So having just-in-time information in those different forms and factor forms is important. And why it is important is so that you have information readily available in your fingertips to make smart decisions at the right time. Information such as top areas of expense categories, comparative analysis of your expenses between months or just in general, looking at the monthly, quarterly, and yearly aspects of it, kind of giving you a sense for what you can do better with these expenses, how best you can reduce them, knowing where you've spent them, and giving you overall sense and a hygiene or health of your business. Right? It really gives you the opportunity, these analytics tools, to visualize data, not in a reporting format, but more in a graphical format that today's day and age users are used to. And we talk about really knowing the unknown and then either planning or proactively reacting once you know the data in hand. I'm going to spend maybe the next 10 minutes just to kind of give you a quick sample demonstration utilizing uLawPractice as an example. Of course, this would apply to any other legal accounting system or manual processing system that you use. How you pivot, capture these details, and record and generate these documents, of course, is totally left to you. But the advantages, of course, of the legal accounting system is that it not only allows you to capture each and every moment as and when it happens, it gives you different various tools to do it so, but it also typically allows you or generates these ledgers, journals, both Law Society and CRA requirements automatically. It should rather, or should give you the platform to generate it faster than doing it manually or on a manual basis, right? And finally, it's all about the compliance from a Law Society perspective as well as from a CRA standpoint for audits, accountability, so that you as a business owner exactly know the use of analytics, the key metrics that determine the health of your business, so that you make, again, those smart decisions, just-in-time smart decisions, rather. And, of course, the ease of use of having the cloud enable you as a legal professional to be free from having to not sit in your office, but being able to have this information readily available wherever there's internet or wherever there's a mobile device that you can use, right? For those who don't know who we are, we're a legal accounting, practice management, business accounting software company based out of Ottawa. We're a very proud Canadian firm. We've been fairly successful in helping customers be compliant in a very cost-effective and convenient manner across Canada. legal professionals are our primary customers who use our product. And if you're exploring options within the tools that you need for your firm, please do reach out. We do have a 30-day free trial, and we do our best to showcase our product and walk you through what's best for your firm's situation. And we have some attractive pricing options as well. And we would love for you to visit our website and explore it further, and we're here to help. So I'm going to quickly shift gears. And I use this practice account, or playground account as we call it in uLaw, Mr. Roger Moore, who's a legal professional. And I'm going to go through a simple step-by-step process of just looking at a couple of disbursements, capturing a couple of office expenses, and then generating the reports so that you have an appreciation of the life cycle of data entry converting into reports, right? So I'm going to start off with maybe utilizing a client that I just created earlier prior to this demo, Ms. Dolly. So I did create Ms. Dolly as a client within my uLaw account. So Dolly is Roger's client. We did a quick client intake for Dolly. We captured some very key pieces of information such as name, first name, last name, understanding how did Dolly get to know Roger Moore's legal firm, an address, you could have phone, email, etc. as well. Okay. And now I'm going to go ahead and actually create a file or a matter for Dolly. So let's say I've done my due diligence, I've done my conflict checks. We're not going to go through all of that today, but we're basically going to, for today's purpose, of course, walk you through how you can create a file for Dolly. And we'll take maybe a couple of situations. We'll start off with a simple disbursement paid out of general. We can maybe look at some other examples of trust as well. So let's give this particular matter a rather simpler title. Dolly Steffi dispute. And of course, I'm tagging the matter as an area of practice, which captures, of course, the revenue where this money is coming from, the category of revenue. Okay, let's say we just signed up an engagement letter. Of course, uLaw provides you with various templates. You could bring in your own templates into the product. You have, of course, naturally the dockets that you could possibly start entering apart from disbursements. But if I were to just focus my attention on disbursements itself, I could go ahead and say, all right, I'm going to add a new disbursement. It's really the first transaction in this matter. And I'm going to actually pay for some facts that I did. So I'm going to type in facts, and you're going to notice the screen change to a unit rate where it's more of paying. Let's say I had about 50 different facts, and I'm charging maybe $1 fax. I could be charging taxes, or maybe I'm not charging taxes. Oh, I could have sent this fax right out of my office, in which case typically there is no expense that was related to it. So I'm just dispersing $50 of disbursement to this client, which is really the client-related expense. But the cool thing in uLaw, of course, or a legal accounting system, is at the same time when you disperse your client, you're also able to report this as an expense to your own business. Assuming that your fax machine broke in your office, and you basically are running to the closest Staples, and you had to pay Staples not $50, but you had to pay them, let's say, $55. That's your expense that you incurred as an office to facilitate that $50 disbursement. You can do that here as well. You can, in the same screen, capture that amount. So instead of $50, you actually paid $56.50. So of course, $6.50 is kind of your loss, right? But let's start off with not reporting any office expense towards that. It's just a disbursement. I hit save. So let's assume there's, let's say, maybe another disbursement involved. One was the unit rate. Now let's look at maybe this example of maybe an actual, one of our friends had asked us earlier on. So I'm going to go ahead and click the Add New Disbursement button right here. And this time I'm going to say Pay Disbursements. I'm going to say Application Fee, $100, and it's tax exempt. And now we're going to say, how did we pay for this in real life, right? We spoke about all those data elements. The data elements at the top is what was it for, what was the date, what was the amount. The bottom part here, reporting the expenses, really capturing, fantastic. Now, how did you pay for it? What bank account did you use? And who did you pay this to? So, paid to the Ministry of Finance. And the question is, what bank account did you use to pay for it? So, did you write a check out of your general account? Or did you use your Amex personal credit card? Did you use a business credit card? Or if you used your own money, it could be tagged as a owner's pocket transaction. So for the purpose of today's demo, let me assume it's a check that you wrote to the Ministry of Finance, or it could have been a credit card payment using your business credit card. And you can even print this check if you like out of uLaw. And I'm going to go ahead and save this. So now you have two disbursements that you have captured as and when they happen, hopefully, right? Or maybe soon after it happened. The sooner that it is, the better the memory for you. Now you have two transactions, and you can start to see uLaw starts to give you a bit of a projection saying, you know, you had a $50 tax, and you've had about a, I can click on it to really see, we had tax at about 30%, and you had an application fee with the remaining amount, right? Kind of gives you a high-level view of it. And if you look at our steps that we reviewed, the next step really is to recover this expense, and that is done through an invoice. So right here as a shortcut, you have an invoice button. You can generate a pre-bill, and the preview, you can use various different color combinations for beautifying your invoice. But here's an example of a pre-bill. A pre-bill does not have an invoice number, so it's for your eyes only prior to sending it and generating an invoice to the client. So the amount is $150, right? It's fax. And maybe let's just say, oh, you know what? I forgot that other court fee that I should have added into this mixture. So this is your opportunity to make any corrections. Add that court fee if you like. Of course, I'm not going to do that for now, but that's the opportunity for you to make any corrections before you generate the actual invoice. If you're happy with this template and this pre-bill, you go ahead and generate the actual invoice. We call it the complete. In this way now, by clicking the invoice button in uLaw, at least you generate the first invoice for this client. Now, of course, once you've generated that invoice, you wait for the client to pay you, and we mentioned this based on the net terms that you agreed upon in your engagement letter. So you can say payment is due upon receipt. So really basically saying, you know what, as soon as I send it to you, you got to pay me. Then you can call the client, or the client calls you, and you accept that client payment. You can just say accept client payment, or even better, we have a little question mark that basically tells you in red what data entry you need to do. You need to basically accept $150 that the client owes you. Right away, quick and easy, $150. Maybe the client paid you a check. You tell the bookkeeping system in real life where do you intend to, or where have you put that money, the check into, putting into your general account. Give them a receipt, or you can actually collect this payment right off your credit card if the client can give you a credit card. So we're tightly integrated with various different credit card companies such as Global Payments and making it easier for you to collect payments as well. So once you've collected that payment, so this was one cycle, you can send the client the receipt for that $150. Now, how has this translated into a journal and a ledger? This really comes down to generating your compliance documents. If I were to do a client's general for the month of October, so I'm just going to do it for this particular month, this is an important document that you generate, right? So let's go ahead and click on the monthly option. I'm going to show you what this particular ledger looks like. It's done, of course, for all of the clients. And there's our client, Ms. Dolly Patterson. And automatically, the legal accounting system, uLaw, generated this templatized, formatted Law Society compliant document that captures all of the elements that's expected out of a general ledger, which is the date, the particulars of what was that disbursed or what were the items. So it clearly tells you it's $50. There was no taxes involved. There's an application fee, which is part of that invoice 3133. It even tells you the $150 that the client paid you using a check, telling you your outstanding balance for this matter at this date and time is $0. And when I say date and time, it tells you the statement was printed on the 11th of October. So this is the situation on the 11th of October. So capturing the disbursement and generating the invoice automatically resulted in the ledgers and journals. You can go ahead one step further. I can click on the compliance here. We did the trust ledger. We could do the client's general receipt, which is a Law Society requirement, and the auditor may ask you for it, saying, can you give me your general receipt document? You can do this over a date range. You can do it specifically to a client if the Law Society asks you specific to a client. And you can just check this and even search for Dolly Patterson and do it very specific to her situation. But in general, it's done for a time period. There you go. For Ms. Dolly Patterson, you had one payment of $150 using 6767 as a check number. So you've already done the general ledger, the general receipt. Now, important, you do the general disbursement, same concept. So pretty much once the data is entered, which is really the responsibility of the legal firm, regardless of what system you use, the advantage of using uLaw or any legal accounting system that gives you these features, of course, is that the resultant documents that you need to generate are done automatically and you don't have to spend the time. That's the time spent or time that you should have spent that's saved. So here's your disbursement payment journal. You had that application fee, or in fact it was for DP Dolly Patterson. It tells you the file number too. Of course, you can see the data elements are different. When it comes to this document, you're capturing the method as well. So automatically we captured that you paid using a check. And there's some other transactions. Finally, where does this come handy? When you're doing your general reconciliation. All those transactions that you've captured as and when they occurred result in the general reconciliation statement of the bookkeeping system. So it knows that $150 was received on the 11th of October, $100 for application fee for Dolly Patterson left on the 11th of October. So technically you're comparing at the end of the month, or in the case of uLaw, you can do it on a daily basis. In fact, you can reconcile this information with your actual bank information, making sure that they both match. Or if they don't match, ensuring you document as to why they don't match. Now, for the purpose of time, I'll move ahead with an office expense. So I'm actually entering an office expense, which is not a disbursement. And for today's date, I could basically go ahead and say purchase of an iPad. It's going to be $650. capturing the pre-tax amount and the tax, or maybe the $650 was pre-tax. You can put that in here. We would automatically calculate the tax based on the province where you bought it. If you bought this in Ontario, there it is. If you bought it in other provinces based on the provincial tax code, you can change that. You could change this to saying there's no client involved, as you see. This is to an individual or a business that you bought it from. Where did you buy this from? Right? So let's say you used the same general account, or maybe let's assume you used a business credit card. Well, I'll just keep it simple. I'll just say same thing here. Maybe use your debit card. So you've submitted now that you actually paid that much amount from your office. Now what happens is basically when you generate the same general expense book, which we spoke about, right? Let's say I'm doing an expense book for the month of October. It includes, of course, the disbursements that were paid out for the client, Ms. Dolly Patterson, but you can see the differentiation right away in this expense book. And the Law Society expects you to do that. Well, what expenses occurred from your business? What of those expenses were disbursements that were client and matter related? And what expenses were your business or corporate? And you can clearly see how we easily demarcate the two. For Ms. Dolly Patterson, you paid an application fee not just for the client specific, but specific to that particular matter. Whereas you had this purchase of an iPad for $650, capturing the HST paid. Why is this important? It's important because of the next step, which is really generating the tax documents. So if you file your HST or GST or PST, you can generate with confidence that report, which now summarizes all of the HST received through other invoices and HST paid. So you can see for the legal fee office for this different client, Charta Marta, you received $26 of HST. For a legal fee invoice for Ryan, the legal firm had accepted or received $52 in HST. Likewise for Johnny Walker, it was $13. But if you look at the purchase of iPad, the firm had paid $84.50 and another $9.20 for A4 paper. So you paid more HST than what you received in this time period. And hence, you should expect at this time, if let's say this is the only thing that you're filing, technically, you should expect a $2.70 from the government. So we basically capture, as and when you enter the data, the HST component, so that it's just easier, one step further easier for you to also file your corporate, the provincial taxes. Okay. And of course, as I mentioned, there's various ways you can import. So you have import bank statements. We pretty much do support various different file formats of various different financial institutions, and we'll continue to add to this list. So we have the usual suspects. We have some credit unions that we have templates for because they all have different templates. You download this from your bank and you upload it into uLaw, and you don't even have to capture one at a time. We just bring all of that data as a bulk. So it reduces data entry as well. So with that, I would like to maybe close out today's webinar. I know I have taken slightly longer than I originally bargained for. I do apologize for that, but I do thank you for sticking around. Hopefully this was an informational session and your time well spent. Once again, the topic and the title of today's webinar is Law Office Expense Management. And it's accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. It is being recorded and will be available as early as Monday next week. Wishing you a very happy long weekend, and look forward to seeing you in our next webinar next Friday. Thank you, everyone. And if there are any questions, please feel free to email us at support@uLawPractice.com. Thank you.